Our first quarter, April, June, pre-provisioning operating profit, we ended the period with a profit of 2,624 crores, which is roughly about 9% up from the same period last year. Our post-tax profit for this quarter at 1,244 crores, which is roughly about 8% lower than last year and about 1.7% lower than the previous quarter. I'll come to the reasons there. Our net interest income for the year-on-year has grown by almost 18%, and we close at 3,724 crores for this quarter. The net interest margin now coming at 4.4%. Our other income, which is the non-interest income, the fees and services income have dropped from the year-on-year basis by 1/3. We closed this period with 776 crores. But if I break the fees and services, the distribution part of the fees and services income has clocked in 144 crores this year, which is 26% higher than the same period last year. So the distribution income with respect to insurance and mutual fund has continued to be robust. Whereas the regular banking fees, which are related to the banking operations, volumes, and all other fees, whether it's credit card related, locker rents, branch banking fees, LCBGs, that cumulatively has come down, and that's down by about close to 39% on the year-on-year basis. The other part of the non-fee income, which is largely relating to treasury, we have a negative number, a small negative number of 2 crores for this quarter. Compared to last year, this period we had 155 crores, and the immediately preceding quarter we had booked 219 crores of income in this category. So that has shown a dip for this quarter. But let me also reiterate that as of the end of the period, as of June 2020, on just fixed income securities, not taking into account equity, we were sitting on a mark-to-market gains of close to 3,000 crores. And this, if I just look at the same number just one quarter ago, it was less than 2,000 crores. So we've had a significant increase in the mark-to-market gains on the fixed income securities, which we have not booked. And resultantly, we've kind of ended up with the treasury income not showing up in this quarter. Our capital adequacy again continues to be pretty strong. We did a capital raise during this quarter of about 7,400 crores. Our capital adequacy overall at 21.7% and at Tier 1 itself at robust 21.1%. The current and savings account ratio at 56.7%, we continue to grow that very healthily. This is in addition to this, we would have the TD sweeps, which has got us another 7.2% of the deposits. Our average current account, and this I'm looking at daily average for this quarter versus the same period last year, has grown by 10%, whereas the average savings account has grown by 34% on a year-on-year basis. We did have changes in our savings interest rates this quarter, and the resultant number is that we've seen the cost of savings deposit fall to 4.2% this quarter compared to what we had 5.2% in the previous quarter. We've also seen a decent reduction in our operating expenses. All our operating expenses, including the employee cost, have gone down by about 10% on a year-on-year basis and about 20% on a quarter-on-quarter basis, and a large part of that coming from the non-employee related expenses. We therefore end this quarter with a cost to income at 41.7%. Our advances for this period, we end the advances number at about 204,000 crores, which is about 2% lower than the same period last year. But if I look at credit substitutes, which we have stepped up during this quarter, including the advances and the credit substitutes, the total comes to about 217,000 crores, which is about the same number as we had 1 year ago and about 5% lower than what we were a quarter ago. Our total SMA2 at this period is still 0.05%, all of 96 crores sitting at SMA2. Our gross NPA number at 2.7%, and our net NPA number at 0.87%. What we have also done in this quarter is we have taken an additional provision on account of COVID, which is the result of which we have seen the increase in provision. Our provision for this quarter at close to 980 crores compared to 300 odd crores in the same period last year. This amount of 980 this quarter includes a COVID provision of 616 crores on a net basis. This is in addition to the 650 which we had taken in Q4 last year. So overall, we stand with a credit provision of 1,266 crores, which is roughly about 0.62% of our total advances book. And if I look at my total overall provision numbers, the total specific provision, COVID provision, standard provision, all of those put together, we are actually covered on our total GNPA by 107% of our total GNPA. On the overall moratorium book, we on moratorium 2, which started from 1st of June, if I take all of what we have kind of granted, availed till 10th of July, the total moratorium books was at 9.65% of the June balances. At the consolidated level, we ended with the quarter with a post-tax profit of 1853 crores, which is roughly about 4% lower than the same period last year. We have taken a similar COVID hits in the two lending NBFCs, which is Kotak Prime and Kotak Investments. Resultantly, the profits of both Kotak Prime and Kotak Investments show a dip on a year-on-year basis. On the non-lending entities, actually has seen a jump in the profits. The non-lending entities bring in about 500 crores of post-tax profit this quarter, which is roughly about 22% higher than the same period last year. And interestingly, if I look at this quarter profit post-taxes, the non-lending entities constitute about 25% of the total profits.